Hi, what's up guys? Brian here. Today we dive deep into the world of property investment in Malaysia. Is it truly a golden opportunity or are there hidden challenges? Why do you think buying property is a good investment in Malaysia? Before we delve deeper, let's address a common misconception.
It's often assumed that property investment in Malaysia guarantees easy profit and high returns. However, the reality is not always as straightforward.
Property investment has been a popular choice for Malaysia seeking financial stability and long-term wealth. The appeal lies in the potential for capital appreciation and passive income through rental yields. So, according to recent data, the average annual property price appreciation in Malaysia stands at approximately 2% to 3%, and rental yields for residential properties generally range from 3% to 5%, depending on location and property type. So here's a pros for property investment. Capital appreciation. Historically, property prices in Malaysia have shown steady growth, making it an attractive long-term investment. Remember, it is long-term. We are talking about average 10 years minimum.
Rental income. Owning rental properties can provide a steady stream of passive income, especially in high-demand areas. After fully paying off the mortgage, the rental income from the property can serve as a reliable and passive source of income during retirement.
Tangible asset. Real estate is a tangible asset that can provide a sense of security and ownership. Now, let's talk about some of the challenges and cons that property investors in Malaysia may face. The property overhang in Malaysia reached a record 27,746 units in 2023, indicating an oversupply of unsold properties. Johor remains the state with the largest number of overhang residential properties, with 5,285 units worth 4.33 billion, accounting for 19% and 23.5% of the national volume and value respectively. This was followed by Selangor, 3,698 units worth 3.36 billion. Penang, 3,593 units worth 2.74 billion, and Kuala Lumpur, 3,429 units worth 3.15 billion. The total residential overhangs unit in 2022 are led by those priced between 500,000 and 1 million at 33.6%, followed by 300,000 to 500,000 at 29.3%, and below 300,000 at 23.5% categories. High entry cost. The initial cost of purchasing property, including down payment, stamp duty, and legal fees, can be substantial. Add everything up, including down payment, legal fees, stamp duty, and reimbursement fee, loan fees is around 15% to 20% of your price purchasing. Loan rejection rates. Stricter lending criteria and loan approval procedures can hinder aspiring property investors. So, this is my personal view seeing the market. There is a lot of property owners who have experienced a decrease in the value of properties compared to its original selling price from the developer. A lot of homeowners hesitate to rent out their property because they are concerned about potential tenant damage or lack sufficient funds for renovation, leaving it as it is. Many property owners who bought properties with the intention to flip them a few years ago have encountered challenges in selling their properties has now long gone. Even you found a tenant, majority of it can't really cover your monthly installment. After holding a property for a few years and making mortgage payment, you may have noticed that the principal amount of your house loan has not reduced significantly due to the way loan amortization works. In the early years of mortgage, a larger portion of monthly payment goes towards paying off the interest, while a smaller percentage goes towards reducing principal balance. This can lead to a slow reduction in the outstanding loan amount, especially during the initial years of the mortgage. A rough estimate, in the first year, it is common for around 80 to 90% of the monthly payment to go towards interest, while only 20 to 10% goes towards reducing the principal. Okay, example. You're paying your monthly installment and almost 80% to 90% goes into paying interest. Almost 20% is towards the principal of the property. So, if you decide to rent out your house, ensure that the rental income covers your interest payment, allowing the remaining amount to pay off your principal. Eventually, the principal amount you have paid off will be returned to you when you sell your property. On top of that, there are additional costs such as maintenance fee, which are usually non-refundable expenses, annual quit rent, and assessment tax that you need to pay while holding your property. The longer you pay your mortgage, the more money you end up losing, as a significant portion typically goes towards servicing the interest rather than paying off the principal. For example, if your monthly mortgage payment is RM2,000 and approximately 80% of it goes to interest, while only 20% goes to the principal, you'll be spending RM1,006 in interest each month without building significant equity in the property. And let's say if you rent at 1,002, you will be losing 400 monthly, haven't include maintenance fee, annual quit rent, and assessment tax.
This scenario is particularly relevant within the initial 10 to 15 years of property ownership.
If the property value does not increase and in fact decrease over time, you may find yourself stuck in this situation until you complete the mortgage term or sell the property at a loss. So what you do? Die also tahan pay your loan till your loan finish and make it as your retired income. Selling a property for a lower price than your outstanding mortgage will leave you with a shortfall that you need to pay back to the bank. To accurately assess the true value of the property, you must factor in maintenance fee, taxes, agent fees, and interest payment. Often, property prices do not increase significantly as developers often sell homes at inflated prices, anticipating future market trends. This can lead to buying at a higher future price, which may not align with the actual current market value. Developers determine prices based on surrounding market conditions and their profit considerations. Additionally, let's assume you find a tenant, but after 1 year, they move out and you have to repeat the process of finding new tenant. In some cases, you may encounter bad luck and struggle to find a new tenant for up to 3 months, resulting in the loss of 3 months worth of rental income. This cycle may need to be repeated almost every year if you frequently experience tenants who keep hopping houses, which is a common occurrence. One unlucky event occurred before at my properties where the water pipe burst and water starts leaking out from the power plug. I faced this problem before where the water pipe was concealed below the floor, making it difficult to locate the leakage. To find the broken pipe, I had to drill through the floor. However, according to the master plan, the pipe was supposed to be in different place. The contractor suggested drilling through the entire house, which will cost a staggering RM10,000, and I decided not to proceed with that option. Instead, I opted out for an external pipe which looks terribly ugly. Additionally, over time, old furniture tend to wear and tear, and you may need to replace them as they become very worn and in poor conditions. There's currently a significant oversupply in the property market, and rental yields are not keeping up with mortgage levels unless you purchased properties around 15 years ago when prices were much lower. In the 1990s, it typically took around 4.7 times the monthly income of Malaysians to buy a home. But fast forward to 2000s, and that ratio increased to 9.5 times the average annual income. If you find yourself stuck with a property that doesn't perform well, you may be tied to it for 30 or 35 years, incurring expenses that you might not be able to recover. At the end of the day, you may lose money and experience opportunity cost, which means you could have achieved a better return by investing money elsewhere. It's essential to evaluate whether investing in property is truly worth it compared to investment options such as putting your money in EPF, which offers a return of around 5 to 6%, which is really safe. Renting seems like a favorable option, providing renters with the perks of staying without the responsibility of property ownership. With affordable rental rates and the flexibility to move when needed, renters have the upper hand. Many property owners urgently seek tenants, creating opportunities to find budget-friendly rental easily. Here is common mistake that normally a person makes when buying a property. Some of these mistakes include lack of research, failing to conduct research on the property market, location, potential rental yields, and growth prospect can lead to uninformed investment decision. Over-leveraging, borrowing too much money to finance the property without considering potential interest rate fluctuations or rental income stability can result in financial strain. Emotional decision making. Allowing emotions to drive investment decisions, such as buying a property based on personal preference rather than considering its investment potential, can lead to poor outcome. Ignoring property inspection. Neglecting to conduct a detailed property inspection can lead in unforeseen repair and maintenance costs down the line. Underestimating costs. Failing to account all costs associated with property ownership, such as taxes, maintenance, insurance, and property management fees, can impact overall returns. Chasing quick profits. Investing solely based on short-term speculative gains without considering long-term growth potential and rental income stability can be risky. Poor location choice. Choosing properties in less desirable or poorly located areas can lead to lower rental demands and potential difficulties in finding tenants. Failure to have an exit strategy. Investing without a clear exit strategy can make it challenging to respond to changing market conditions or achieve desired financial goals. It's essential for property investors to be well informed, conduct due diligence, and seek professional advice when necessary. Do a lot of sightseeing and see what is the current price of rental at that area. You can just refer to iProperty or Property Guru. The amount of rental changes all the time. Real estate investment can be rewarding, but it requires careful planning, risk assessment, and a long-term perspective to achieve success. In conclusion, property investment in Malaysia presents both opportunities and challenges. It can be a rewarding venture for those who approach it with careful consideration, research, and financial planning. Remember, every investment carries risk, so it's essential to weigh the pros and cons before making a decision. Ultimately, whether you choose property investment or other investment option, always stay informed and have choices that align with your financial objectives. Comment below. What is your take on this? I would really like to hear your perspective. Thank you for joining us today. If you found this video helpful, don't forget to like and subscribe to our channel for more informative content. Until next time, happy investing. Thank you. Bye.